Hi everybody, my name is Christopher Dean. I'm one of the founders of Treasury Prime. I'm a CEO there. Thanks for coming to my talk. Today I want to talk about on-core versus ledger accounts. So my background is I'm an engineer. I used to be a machine learning researcher back in the day. And so because of that, I'm going to talk about nothing technical and only about the pros and cons, the legal ins and outs of having different kind of accounts to store your money in if you want to do banking operations in the US. This is a question that I get, see my buddy Warren in the back who might get this every day too, about which is right and which is wrong, and the short answer, there is not a right or wrong. It's like, what database do you use? You use the one you should use, and they have different pros and cons, and we're gonna go through them today. I encourage you to stop me, just raise your hand, I'll keep an eye out, we'll stop, ask me questions if you want. And if not, I'll just keep going. So, here we go, this is me, I'm Christine, great, that's my picture. So, let's talk about what a bank account is, Bank Accounts 101. A bank account is a way to store money. There is some legal requirements about who's allowed to store money in the United States. You have to have a banking charter in some way. There are about 10,000 deposit holding institutions in the US. There's, let's say, 4,500 commercially chartered US banks, which we normally think of, and there's credit unions and some other stuff, and you add all up, that's about 10,000. But mostly, if you're a fintech, what you want to do is not become a bank, because boy, is that a lot of work. But what you want to do is partner with an existing bank to hold your accounts. And that's the question will come up. How do you want to hold your money for your end users or for yourself? And I will go through one of my favorite examples as we run through this, which is one of our clients called Zebo. What Zebo does, it's a neobank for landlords. And they had this decision, they went one way for them, but you could go another way. So there we go. What's an account? An account is a thing where you hold money in. There are different kind of accounts that you and I work with every day. There's like a checking account that we probably all have. Some of us might have savings accounts, so very similar ideas. There's trust accounts, there's escrow accounts. At the end of the day, they're all accounts. They're all things to hold money. There's certain legal requirements around them, and those are what we're used to. But there are other ways to think of an account. A bank account could be a virtual account. It could be a fake account. You could have a sub-account on other accounts. But the ones we're going to talk about today are two specific kinds of DDA accounts. One is a regular on-core account, and an on-core account is what you all have or what we all have if we bank at a regular bank like Wells or Chase or something. And a ledger account is where the ledger is held by an entity outside of the bank. So it's not actually on the banking software itself, it's held by another entity. Many of the banking as a service providers do this. I think all but maybe two do this exclusively. This is not an ad for Treasury Prime, my company, but Treasury Prime is unusual, let's say, in that we do all the combinations. We do on-core, we do ledger, we do virtual, we do trust, we do everything. So we're going to go through this, talk about these two kinds, on-core and ledger accounts. On-core is traditionally what you use. Ledger is the ones held by a third-party entity. So, on-core accounts. So who here knows what a core is? I do. A core is the software a bank uses to hold your stuff. If you want to know what your balance is, the bank has to core. If you want to know what your transaction is, the bank has to core. If there's an operation to compute, say, the interest you've earned for that month, there's an operation in the core to do that. If you want to automatically sweep money from one thing to another, the core does that. If you want to do the low-level activity of opening an account, not is it okay to open an account, but actually just open the account, that's done on the core. And by an on-core account, the industry generally means an account on one of those pieces of software. These have some cool advantages. But let's go through how this actually works. Let's say you're a fintech, Zebo, my favorite example, right? Zebo has an app. You might have an app where you have a bank account for an online banking system for your end user. You have maybe cards for them. You show what their last transaction was. Apparently this is probably a retail as a personal neobank because someone bought something at Safeway. And how does the fintech display that information? They'll make a call to some system, an API call, and they'll ask for an account. An account will tell them, here's how it works, here's what the transactions are, here's what your balance is. And the way the API layer does that for a non-core account is that we just ask the core, what's your balance? And why don't you ask the core directly? Many of these systems, not all of them, but many of them are very archaic. Our oldest one was built, the core that we integrate with at Treasury Prime, I think it was originally built in 1982. It still runs on a mainframe. It's been upgraded a zillion times since then, but it still believes it's 1982, and it still runs inside on this mainframe. There are newer ones like run on Oracle databases or just regular Java apps, and those are good. But generally, I wouldn't have an end user app integrate directly with that. There'd be a layer through that. They'd ask their account, and I would find their balance. And the cool thing about being on an Encore account here at the bank is that all the services that you already have, all the things that work at a bank, for your bank that you Chase or Wells, continue to work the same for your fintech users. Like if there's fraud monitoring, it's already there at the bank. The bank is already monitoring for fraud. If there's cards issued, it's really easy to issue another card on a bank because you do that already. ACH and wires and check deposit, those just work. You write a paper check, it just works. There's no magic here. You can send out a wire, you can have a wire come in, and I can tell you that as we get to the ledger accounts, a lot of that stuff just doesn't work. A lot of people say, oh, it works fine, it's great. Like we spend our lives cleaning up other people's mess on this stuff. But this is the basic layer. There's a core system somewhere. You can think of it in a mainframe or regular system somewhere. But that is the center of a banking system. And if you're an Encore account, you got to take advantage of all those systems. I'll pause for a moment. Anyone have any questions? Make sense to everybody? Yes, no, sort of? Okay, great. Moving right along. So let's talk a little bit about these account services a little bit more. So what's a common deposit thing that you might want to do with an account? Well, what you would do is you would open an account. You would do payments like ACHs and wires. You might issue some cards on it. You might write checks. You might deposit checks. How does that work with an Encore account? Well, there's, let's just say, 3 major vendors for core banking systems in the US. There's Jack Henry, there's FIS, and there's Fiserv. They are an integration point for a lot of these services. A bank will sometimes partner with one of those people, or they might find a different payment gateway, like an ACH or wire gateway, and they will integrate that with their core. So, for example, when an ACH comes in, it's a notcha file that'll get processed, things will happen, they'll verify the account is good. If it's pulling money, it'll make sure your fund's good in that. If it's depositing money, it'll put that somewhere. Often this is a multi-step process where money's put in a settlement account somewhere, and at some point throughout the day, it'll be swept into the actual end user's account. There's a lot of moving parts here, and if you're an Encore system, that just works because there's some person at the bank whose job it is to make sure that works every day. And I can tell you, generally, there's ACH, there's a good number of problems every day. There's knocks and returns, and basically it didn't work. Things bounce back or something like that. And you'd hope that most of that was just handled automatically by the software, but really it's not. A lot of it is, but there's not enough. And the same is true with wires or checks. Checks particularly are a problem with everyone. Like the US still relies on paper checks a reasonable amount. I have someone who comes to clean my house and they want a paper check. And no matter how hard I've tried to convince them to, please let me not have a paper check, they want a paper check. And so I have to write one. It has to work on my account. It has to just work. And if you're on core, that just happens. So this all sounds pretty great, right? Why would I do anything else with this? Because everything just works. Well, there are pluses and minuses. So the strengths and weaknesses here are, like I've been talking about, you're at a bank. You get all the stuff the bank does. It's just out of the box, it just works. There isn't like, oh, I have to wait for my vendor to do remote deposit capture, or they don't do international wires. That all just works at the bank already. The KYC is great. Usually there's whole groups inside the bank who are using tools. They use Charles's tool, some of them Alloy. And they're the ones making sure that these people are good to bank, and they will help the fintech and guide them along the way. It's easy to get extra customer support. You call the bank, it's a regular bank. It's easy. All these systems are all maintained by the bank partner. There's nothing you need to know. You just have to have a good relationship with the bank. But here are the problems. Generally, and I guess it's not written here, it can be more at a more expensive way to go because it's more work for the bank. Secondly, it's semi-inflexible. The bank is going to do what the bank's going to do. If you don't like their rules, you might just be stuck. If you have a good enough relationship with the bank, you could tweak them a lot. Let's say it's from the fraud monitoring. You want to loosen it up a little bit. You might be able to convince them some, but we have clients who've had to move from Encore to ledger account just because the people they banked were so unusual. That because they banked people that were unusual, they needed more flexible policies. And so that's a problem with the Encore accounts. You get everything for free, but you get what you get, right? And if you want other custom things, they're harder to find. Generally, the banking cores are mediocre. They're a sophisticated piece of software and have lots of features. They can do sweeps, like I said before. You can go to negative on balances. You can do all sorts of cool things, but this technology is not great. So if you want something fancy, often you're just stuck because you get what you get. And this is the main reason why people don't choose Encore accounts, because you get what you get. And I think at the end of the day, that company I've been using at Zebo, they chose to go with the strengths because they have a very normal customer base. They wanted to get started quickly. The price difference for them was very small. It didn't really matter what the price difference was. And they liked that they got all this customer support from the bank. And they have a great relationship with the bank. And I think that at the end of the day, that's why they choose to go with an Encore account. But there's other ways to go. And the other way is that you hold a ledger account. So Encore, you get all the bank features. A ledger is something where one of a fintech somewhere, a banking as a service company, will write a piece of software to hold a ledger. You could write a ledger in 100 different ways. You could write a regular old-fashioned ledger, a regular accounting ledger. And the other way is you could write an immutable ledger like you would for a modern blockchain app. And I think most people these days write immutable ledgers, but there's lots of ways to do it. But it's someone writing software from scratch. I personally have written 3 separate ledger systems, and they're not that hard to write. But to get all the features that you want in a modern core takes a lot of work, just because there's a lot of features. So ledger accounts. Let's go through the same exercise we went through, but this time with a ledger account. So here we are, we have your app, and you want to know the balance again. Well, the bank isn't providing these services anymore, so you have to either do them yourself or go with the banking as a service partner to do that. You need the KYC run because there's not a BSA, Banking Security Act, inside the bank doing this anymore. You have to issue cards. Either you have to make a relationship with someone who's going to be an issuer, or you have to piggyback on the banks, or you have to find some banking as a service one. ACH and wires, that's a separate thing. RDC, which is taking a picture of a paper check, remote deposit capture, statements, all that stuff you have to do yourself, or find a partner to do it. Treasury Prime does all these things, but you have to have them done some way. So I ask for my balance. I go through one of the services. I see what the account is on the ledger, and I'm done. I don't actually have to go to any other banking system. In a database somewhere, there's what your balance is. And so you just send that out. That's the balance. That's great. You're not using any mainframe from 1980, whatever. For if you're using Treasury Prime, this is very typical. We have a system running on AWS. It's a regular app. It's nothing complicated. It just returns the answer. That's up all the time. You're never going to have a problem with weird downtime or anything like that. But all that money has to live somewhere, because we are not allowed to hold funds ourselves. Only a commercially chartered bank can do that. So that money has to sit somewhere. If you have your fintech, you have 1,000 clients, each of them have $1,000, that's $1 million that has to sit somewhere. Where does that money sit? Well, typically the way to do is you'll make a single account, a FBO account for the benefit of others account, and the totality of the funds will sit there, and the ledger will be responsible for keeping track of all the money that goes in and out of that. So if anyone else moves money out of that, you're screwed, because now your ledger's out of date, and you might say, well, I think you have $1 million, but you only have 900,000 because someone took some money out. The thing that is surprising here that I think most people get wrong and don't really realize is the hard part. Everything I've said right now, it's pretty easy, right? Is it a pain to make a statement? Sure, like a statement you send to an end user. Sure, but really it's just a PDF file at the end of the day. It's nothing really that complicated. This tax stuff is really quite simple. But the hard part here is connecting that FBO account to all the external services. You actually still want to send a wire out. You actually still want to receive a wire. But remember, the accounts that you have are now on the ledger, they're not on the core. That means the account numbers you have are not on the core. So let's say the account number for this fine customer here is 1234. A wire comes in for, here's $1,000 for account 1234. The bank gets that and goes, dude, I don't know what this is. They can send it back. That won't work. So that means you have to integrate with the wire gateway and the ACH gateway and the card issuer and everything else to make sure that any activity that comes inbound or outbound correctly gets routed to your ledger so you can deal with this properly. So the wire comes in for $1,000, you can say, this guy's got another $1,000, and you can actually deposit it in there, and that all works. And behind the scenes, this is very complicated because there's 20 different settlement accounts and sweep accounts that are moving all the money around, but the end user and the fintechs, they do not care about this. They just want their money. And that is, so you have to make sure that works perfectly. And my observation is it rarely works perfectly. We are at banks where, Treasury Prime is at banks, where there are multiple vendors who are doing things like this. We regularly are called to fix up their problems and have software that runs on our side to fix up their problems. Like a very common one is the ACH originator being wrong. Very, very common. Very, very common. And so we have, I don't think Warren wrote it, but our friend Carrie probably wrote a cleaner to go through and fix all these problems, not for us, but for the bank, because they have these other partnerships they're doing. This is a non-trivial aspect to do. Not the first half of the screen. The accounts, that's easy. It's the last little bit. It's connecting all these different gateways here. I'm a fast talker, so I'll stop for a minute. Anyone have any questions, comments? Sir? Right, so the question is, how do you do reconciliation with what you know, with what the bank knows? What's in the FBO account if it's $1 million, and if you think it's $1 million? The reconciliation problem, is the whole issue here. The reconciliation and the integration, that is the exact service system I'm talking about. Getting that right every minute of every day, that is Treasury Prime. It's we do more than one way to do this, but that is our job every single day. How do you do it? It's like I mentioned. You do deep integrations with the gateways and the wire systems. Traditionally, this way this is done is to have flat files zooming around. The bank will write one, you'll read it, they'll put it on an FTP site, you'll read it in, you'll parse it, you'll do stuff with it. You want something to happen, you make your own file up, a CSV or whatever. If it's fancy enough, you can make a Nacho file up or whatever and send it. Now, things will happen with that. We have found that we have a more successful, less error-prone, less manual system if we don't do that. All of our banks, we now do a direct core integration. So if we want to know what the balance of an account is, we just ask it and we get it in real time. There's no file. If we want to move money from a settlement account to actually the FBO account, we do that in real time using a book transfer. And the integration doesn't have to be deep, but the integration not being there, back especially in the early days of Treasury Prime, was a source of constant bugs. And it was always, it'd be like once a week, a client would call a neobank would call us, we would call the bank, and then it'd be like this whole chain of work to do. That's the whole job, how do you do reconciliation? Right. Is there another question, sir?
You kind of just answered this one.
Yeah.
Are you able to do then most of the communication between the ledger and core through like the core's built-in integration to do stuff that rely a lot on, hey, I need somebody at the bank to set up some sort of file transfer process that's sort of manual. Well, maybe it's not
Yeah.
It's not built in.
Right. So the question is, when you're doing the reconciliation, can you do it all through direct core integrations, like a direct API call to the core, or do you need or can you use flat files in general? And are there some edge cases where the core just can't do it, so you need a flat file integration? The answer is the core just can't do it. You still need some flat file integrations. A common one for us is one of our banks, the wire gateway is old. And so the best we could do there is when a wire comes in to one of the accounts that are held in the ledger, there's a wild card that says this account starts with 123, so account 1234 must be for the ledger. I'm going to put all that money in the settlement account, and I'm going to write that a text line to a CSV file, and I'm going to send it, and they save it up, so they do it like hundreds at a time. And then I'm going to put it in an FTP site. We monitor that like every 5 minutes or something. We see a new file dropped, we read it in, we say, look, $1,000 came in for account 1234, it's a settlement account, whatever. And we go, great, we do a book transfer to move the money out of the settlement account, the FDO account, and we try to do this in a transaction, although it's technically not a transaction, and then upgrade our ledger at the same time. So like, great, you have your money now. But there are things like that all over the place. And it's usually the inbound stuff, which is way harder than the outbound stuff, even though it's irritating. You know, I just as a person, I'm totally interested in the space. So I have like 80 accounts at neobanks all over, and I regularly get like notifications, and I'm going, well, that's just wrong. It was sent from me, not from whatever the banking as a service is called, or the partner was called. I'll keep going. Definitely going to try to keep going. So when should you use a ledger account? I'll go through the pluses and minuses here. Generally, if you're confident in your ability to build a ledger and build features on it, it's not that hard to build the ledger itself. The integrations are hard. So if you're confident in that, it can be a great thing to do. It's very flexible. You can get lots of features, like some cores don't have like sub-accounts, and you might want sub-accounts. And so like, you can just build that yourself, or you can use us and we'll do it for you, or whoever. But generally the strengths and weaknesses, they're the inverse of what we saw before. You have more control over the KYC and the fraud monitoring and that, because at the end of the day, the bank's like, there's just $1 million in this account, don't screw it up, And you can, you might call it compliance, it's not really compliance, it's more like anti-fraud, but you could either hand that to us, to Treasury Prime, we'll just do it for you. You can hand it to the bank, they'll do it for you, or you can take it on yourself. And I can tell you every single fintech we know, especially all the ones we power ourselves, at scale, 100% of them do it themselves. And it's not even a question. No one wants it handed off because they're the only ones who know their customers well enough. Another strength is if you run your own ledger, it's consistent across banks. Let's say you're Chime and you're at two banks, you're at Bancorp and Stride. It's nice if for the end user, they can't tell, except for maybe a routing number, that's different. There's not weird behavior, settlement times are different, it's just the same. Because of the way you're structuring it, a lot of what you're doing is just software, it can be cheaper. The banks often will have to pay a fee to their core providers, like per account or per action. So you're doing less actions. You have less accounts because they're all in the ledger, so it can be cheaper. Often it can be not a lot cheaper, but if you're in a low margin business where every penny counts, then absolutely. The weakness is the payment gateways themselves are often broken, and I would say that 90% of the people doing integrations with the payment gateway do it wrong, and they screw it up somehow, and they spend a year fixing it, and cool. You could have increased fraud exposure if you're not using a system like Treasury Prime and you're just handling it yourself. It's fine to have increased exposure, but it's a thing you have to deal with, right? It's another problem. You kind of moved the problem from Encore to fraud. You or your partner has increased reporting requirements. If you want to offer FDIC insured accounts, which I think 100% of the people do, then we will, you have to tell the bank about all that stuff. And the support is on you or on your partner if you don't write it yourself. Your partner says, I can't call the bank. You can't call the bank because they don't know anything about these accounts. Anyway. Yeah.
So do most banks support
it's mostly a new concept, but they'll all do it. You just have to tell them how to do it. It's not that they don't want to do it, they just don't know how to do it. And it's all in the gateways, right? The cards, like a debit card, for example, won't have this problem because a debit card has a PAN, not an account number, and you can do that on a different layer. It's the wires and the checks and the ACHs that are the problem. Checks are the real hard one to do because checks are dumb, and so you see all the problems. The question was, do banks support the wildcarding of accounts so you can have the support? They do, but they have to be taught how to do it. They're willing to do it. You have to find the right operational person who's running the gateway inside. And at most banks, there's one person. Sir?
Do you have any advice on how to bridge the servicing gap that's created by leveraging ledger accounts?
Sure. Yeah, so how do you bridge the gap yourself when you want to do servicing? There's two kinds of servicing. One to your end clients, they're going to call with a question. Then you need to make sure that either you have insight into the accounts so you can see what's going on, or you have a partner which can share that insight with you. Like we have software tools to do that, and a customer support group you can call on our side to do that. If you're integrating with the back-end systems, the technology, I don't have good advice other than I've been doing this for a long time now, and it seems like everyone's freaking different. And you just get good at it. It's like finding bugs. You get good at fixing bugs after a while. I wish they were better. I talked to some people in the back there about ACH earlier on, and yeah, it's a notch file, right? It should always work. No. Ledger accounts are also great for cross-bank services. I'm running out of time here, so I'm going to just close up and say thank you. I told you what I know, but I didn't tell you my opinion. Why would you use one over the other? Why would you use a ledger account versus a non-core account? And I think the reason is actually surprising. You should find a bank that you like working with, that the bank is good, because sooner or later you're going to have to deal with the bank. And it's the beginning, I get it, you don't care. Spend 10 minutes, talk to the banker. If they're an asshole, don't work with them, right? The bank will have an opinion about what they want to do. Just do that. Because it's really that relationship matters long term. In the short term, I can see it doesn't matter, but have a relationship with the banker. If you end up using a ledger one, do a simple test. Get the banking as a service person to say, make an account and try all the things. Make an account, send an ACH out. Have someone send you an ACH in. Do an ACH credit and debit. Do all the things. Do the same thing with wires. Get a paper check that clears. Getting cards can be more expensive, but see if you can issue a card and just look at those transactions. That takes a week to do just because you have to wait for everything to clear. But just look at those transactions in the transaction log and see if they make sense. And if they don't make sense to you, you should just move on because you're going to have to live with how that code works for the next 10 years of your life as you run your startup. I think I might, one more question? Sir.
How much of the relationships, or if you're on Treasury Prime, how much of the banking relationship on compliance are you?
I missed the last part. Say it again.
If you're on Treasury Prime as a customer,
Yeah.
how much of the banking relationship do you own, and then compliance do you own? And how much of that is handled by Treasury Prime?
Sure. So the question is, if you happen to use our company, which is Treasury Prime, and you're a client of ours, a fintech, how much is the banking relationship on Treasury Prime versus the fintech, and how much is the compliance on Treasury Prime or the bank versus the fintech? And the answer for Treasury Prime is yes. We do all the things. Typically what happens is there's a graduation process where you start out, we recommend a bank to you because we know our banks really well. There's a dozen or so banks, and we say that's the one. If you want to call with them, you can have that. I suggest everyone have the 5-minute call, even if you don't want to. It's 5 minutes, just do it. Some people are really into it and they spend hours on the phone with the bank. You have a direct relationship with the bank and Treasury Prime whenever you want. Most people will start out us handling a lot of the compliance, or the bank handling a lot of client spend on the bank. They don't do anything. They have very little relationship with the bank. But as they grow, they graduate. Every one of our banks at scale every one of our fintechs at scale has a significant relationship with the bank, and handle either all or most of the compliance themselves. The big one handles all the compliance itself. I'm at time, so thanks so much. I'll be outside if you want to talk. Anyway, it's great to see everyone. Thanks. Thanks, man. Okay?